Welcome to the Rick Hills Real Estate Show, where once again we try to make sense of this crazy Arizona market. Happy Monday, everybody. I'm back. Boy, what a weekend it has been up here. Yesterday, I went clam digging. It's the first time I've done that in 30 years, and my muscles feel it. We got our limit of butter clams and steamers. Good morning, Jackie. And we'll be having those cooked up tonight at my brother's place. My sister-in-law evidently has a really good recipe with vermouth of all things. So going to be interesting to taste that. Not interesting, exciting. Then other news. And then we're going to get on to some real estate stuff here real quick. So bear with me because we're going to talk about where the market is today. Hello, Sam. And some ominous clouds that are building. And speaking of ominous, I was at a retirement party downtown Port Angeles on Friday night with my brother and sister-in-law and a bunch of people I haven't seen in like 30 years. And somebody came in and said, oh, Randy and Janae are out in the parking lot. Somebody tried to steal their car. Broad daylight. They broke out the window. They tore the steering column all apart. They have a Kia. Evidently, you can steal a Kia. I did not know this. With a USB stick. You can put it in there and start the car. So they're really popular among the thieves. So they stole a gun out of my brother's car. So we're all just hanging our head and going, man, they'll never catch these guys. Well, guess what? He gets a call from the sheriff's department last night. They caught him. They caught him in the next county, and they recovered the gun. Now, they wouldn't have even known to call my brother if it weren't for recovering the gun. But get this, 3 kids, 13-year-old girl and a 16 and 17-year-old boy. And they stole another Kia and they crashed it. And then they tried to run away. So good news. They now know who tried to break into the car. They're from Port Angeles and they were out in Port Townsend about 45 minutes away. But 13, 16, and 17, what a disappointing thing to experience. But anyway, we're glad they caught those little buggers, and their parents need to have a little chit chat with them. So where are we at in the market? And I want to kind of roll through a few numbers here. Oh, and one more thing. Mandy, congratulations. You're getting the keys to your house today. And thank you, Jessica, for helping with that. And Jeffrey, you're getting the keys to your house. I think it's today or tomorrow. And thank you, Jackie, for helping him whilst I am away. And here's where we're at, folks. Look at this. Inventory is like a broken record right now. We're sitting down here at 10,724. I put the green line up here because, I always get a lot of comments. I'm waiting for prices and stuff to go back to pre-pandemic levels. Who knows? That's the green line. That's where inventory was. Started at 18, got down to 11. So our inventory is almost at 2019 levels, but every week it keeps going down. This one's interesting. Closed sales over list price. The tighter inventory gets, the more this number starts to go up. We're at 21% of homes going above list price, not by much. And mostly it's in the category of between 300,000 and 400,000 and 400,000 and 500,000. But it reached a peak up here of 60% of homes were going over their asking price. So as inventory gets tighter, things start going up on the bidding wars. And average list price, this one is kind of surprising to me in that here we are almost at the peak of 2022 levels. So we have erased all of the losses that we incurred when rates first spiked up. Let's talk about that for just a moment, shall we? Normally, interest rates go up, house prices adjust, they start coming down. We've never been in a situation where so many people have such a low interest rate that they just don't want to get out of it and buy another house. Therefore, they're not listing. So while rates are going up, prices are holding steady. In fact, they're increasing because there just aren't enough homes. When you filter out and just say, well, I want to find a home between 400 and 600,000, there's only 4,900 homes in our market. So that's the problem. And it's not getting any better anytime soon, but maybe it will. I don't know. Let's look and see what happens. Right here, where you see the Cromford Index and Supply Index, you can see that they've, Well, that magnifying glass didn't do me any favors there, but the demand index is kind of flattening a little bit, and while the supply keeps dwindling, and Andrew here makes a comment and says supply and demand economics seem to be difficult theory for people to understand. When rates drop with low supply, prices will go up further. I have a 3% rate, never be selling. That you are the story of the entire real estate market, with the exception of Austin, Texas. That's the only city in the country that has higher inventory than pre-pandemic levels. Austin, Texas, for some reason. Flood of people moved there. Maybe they decided they didn't like Austin, Texas, and now they're selling their homes. But that's not happening. Not happening here. Now, the other thing that we see too is as rates go up, so do seller paid concessions. Now, these are starting to come down because, again, inventory. So if you're the only one that's for sale on the block, you're probably not going to have to give away any closing costs or concessions. We're down to 40% where we reached a peak of 51%. So there's a difference there of 11%. But we'll see more of that if we get more inventory and if we get more rates coming up. Now, the word skip is interesting to me how that showed up, and it showed up with three of the Fed chairmen just using the word skip instead of pause. So why do they do that? Well, sometimes the central banks can influence bond markets with words versus actions, and it looks like they're trying to let the traders know that, there's a possibility that come the June meeting, we may just skip another rate increase. It would seem highly unlikely that they would go down. That's not going to happen. And if they went down and went back up, they'd be repeating the same mistakes that were made in the late 1970s when the chairman before Paul Volcker actually lowered rates and then had to say oops and go back in and raise rates, and then inflation came roaring back. The inflation numbers are getting better and better the more we look at them. But who knows? And I try to just share the numbers that I'm seeing in the real estate market. I am by no means a macroeconomic expert. I put out one video yesterday morning, talking about the problem that we're possibly facing with the feds needing to refill their checking account and selling 1 million in treasuries, $1 trillion worth of treasuries over the short term. And here's another look at that. Banking analyst warns of real credit crunch approaching. Now, I've talked about this just a little bit before that said, real estate right now, prices are going up. There's nothing in the way. It looks like prices are going to gradually keep increasing as long as we're in this inventory crunch, unless we see anything going on in banking that would cause a credit crunch. Well, starting to see some articles and saying that borrowers need to brace themselves for a significant credit crunch in the months ahead as banks scramble to retain deposits by a tried and true method, paying higher interest rates to depositors. So they want you to keep your money there, so they're going to have to pay you higher rates because they're paying higher rates. The downside, it says, from the banker's perspective, is that paying depositors more reduces profits, meaning less money is available for lending. That also comes at a time when banks are expecting that regulators will set higher capital and liquidity requirements in the wake of bank failures that include SVB Bank, First Public Bank, further reducing the funds available for lending. So we all know what credit restrictions mean. I mean, you're going to need a higher credit score to get a loan, or at least get a decent rate. So these things are starting to happen out there. And the $1 trillion that in treasuries that the Fed is trying to do, or not the Fed, but I keep screwing that up, but our Treasury Department, they need to sell T-bills to raise money, to put money back in the account, because we are getting this close to making it look like my checking account or most people's checking account after Christmas. So they got to raise this money. Well, when they raise this money, it's going to come out of the banks. People are going to take their money out of the banks, and for the short term, they're going to put it in 1-year T-bills. Will this affect mortgage rates? I don't have a clear answer on that because that's usually driven by the 10-year Treasury, not the 1-year. So those of you that know or you're experts in that, let me know what you think. I'm more raising the question than any conjecture here. I don't know. But they're starting today auctioning off $170 billion worth of T-bills, 1 year and 6 months, trying to get some money back in the account. Now, even though they sell $1 trillion worth of T-bills, they still have to use 500 billion of that just to pay the interest on our previous debt. So we're in a kind of a wild west when it comes to banking right now, and this could work itself out over time, or it could end badly. But we just don't know, or I should say, I don't know. I don't know what we're looking at here. This article goes on to say, at the same time, Bernstein's conference this week, Wells Fargo CEO Charlie Schiff said his bank is pulling back on lending to some. Well, they've been pulling back on lending to some for a long time because they've been in trouble with the feds. We've also been proactive about taking some measures just to reduce originations from marginal borrowers, both on the commercial side and on the consumer side, which I think is the right long-term thing to do for the franchise. Others say banks are going to become even more selective in their lending in the months ahead. We're going to see real tight credit conditions over the next year. It's going to have an impact on the economy. So that's what we're looking at, folks. And Sean here says, Andrew, 100%. Yes, absolutely. Supply and demand is everything. If you don't have enough of something and there's still some buyers. I mean, I had a YouTube thumbnail yesterday, and it was investor purchases in Phoenix down 60%. This is meant to tell you that that's a bad sign, that, it's going to get bad because investors have pulled out. Well, good. I mean, look, our overall transaction traffic is down over 44%. So investor traffic being down 60, that's not a leading indicator, folks. That already happened. Maybe they went to Texas, but there's still investors out there, but investor purchases are down. So putting out a headline that says down 60%, watch out, here it comes. No, that already happened. They're all done. They pulled out. 60% of them went somewhere else. So that's not an indicator that things are going to get bad. What's an indicator that things are going to get bad? It all depends on credit. It all depends on the availability of credit, and it depends on inventory. So if there's an event that causes our inventory to spike, you'll see prices coming down. But for now, just like Andrew says, I'm not selling. I'm sitting at 3%. What's going on in Austin, Texas? I don't know. Sean says, how long are we going to stay in this lull? Barring any shocks to the system, Sean, I think we'll be in here till fall. But it could be a very interesting summer. So let's say that these tightening conditions in the credit markets play out, then things will look rather different in June and July. And this is June. So, if these things play out and credit is harder to get, then we'll have less buyers. Inventory will start growing slowly just because we're not eating up as much inventory that's out there. And as you can see by the ticker below, our active listings are 11,819. So we had 3,400 new listings come on the past 7 days. New contracts were only 2,854, but that's because of Memorial Day. That number will shake out tomorrow and the next day as we roll back in to a normal 7-day period. But that's still 84% of new listings are going under contract. If that number gets down to 60% or below, you will see prices turn. And that's why I like to go back and just keep looking at these charts again. And this one shows the story right there that the average list price is up to 2022. Now, people are quick to say, those greedy sellers. Look, if 84% of them are going under contract, that's not a greedy seller. That's reality. The buyers are offering that. And Arizona will not allow New housing construction in Phoenix area that depends on groundwater. Yes, that came out last week that they're saying that you're going to have to find another source besides groundwater. So I think they actually pulled some permits, kind of minimal, but they're not allowing any new permits. And that's going to be very interesting to watch. They have to keep in mind, they have to show a 100-year supply. So they're saying right now that the 100-year supply, we're kind of running out of resources for that. Colorado River allotments, I think they're probably going to drop us another 20%. They're still in negotiations with that. That'll have an impact on inventory as well. That could have an impact on a lot of things, but 100 years is a long time. So they're just going to put a pause on it. Prescott did that for a while. They had no building because of water concerns. Prices shot through the roof because why? Well, there was nothing to buy. So, got one here. It says, is Zillow estimate market value correct? I bought my house about 7 months ago. It said it's worth about 30,000 less today. No. Depends on the house, but 30,000 less than 7 months ago. Looks like it's taken them some time to catch up because they have, if I look at actual prices, if I can pull this up here for you, Zillow's statistically off about, what do they say, 14%? Let's see if I can, average sales price. I'm looking here by topic. Bear with me here. Talk amongst yourselves. Sales prices, annual, medium, all areas, all types. Here's the monthly chart. Let's see what this shows us, folks. Pulling up here. So here's the sales price. So if you bought in November, you bought back here. This is where you purchased. This is where we are today. That doesn't look like a 30% drop to me, does it? So that's Zillow for you. So you can't rely on those aggregators online. That's somebody flying over your house with a jet, looking down and going, whoops. Yeah, I think that's worth blah, blah, blah. Mark, with regards to rentals, took 1 day to rent last month for Mesa property and rented second rental in 3 days this month. Rent prices went up 4 cents a square foot. There are a lot of multifamily permits out there that may give us some relief in rental prices. And Sean says, Sam, maybe you overspent. That all depends. Were you competing against anybody else to get the house? How long are you going to stay there? Try not to look at the value of your home like your 401k. You're going to be there a long time, I assume. And I've told the story of a few of my friends up here. Somebody was making the case the other day that, renting and buying are the same thing. And I go, well, not really. My buddy up here, he bought this house. He subcontracted out and he built it. He's got a big shop. Anyway, it's $1 million property and he doesn't owe a dime on it. Yeah, he's paying property taxes, but it's paid off. Now my other buddy up further uptown, his is paid off. So do you think they get on and look at the value of their home or their equity on Zillow? No, they don't pay any attention to it at all. They've got an inheritance for their children. That's their plans. And their children will probably sell the properties because they're not going to move here. And that's the nice part about building wealth. And they also have, they can tap into it if they need to. So he tapped into it to buy a new boat. Then he paid it off and, life's good. He's going to take me fishing. So the reason I tell that story is you can kind of drive yourself nuts getting on Zillow going, what's it worth today? And the other thing about Zillow and any online aggregate that you're looking at, home prices don't change in a day, but they do on Zillow. You can look on Tuesday and you can look on Wednesday, get a different number. They're pulling tax records. So there's a house down the street sold. Okay. We think it's the same. Oops, looks like it went down a little bit. So we're going to pull you down. It'll give you a Zillow ache, which is a Zillow headache. Now, Pat is going to be on tonight. I don't know, maybe about 7 o'clock, not live. But I asked him a while ago if he could do a show that just says the week ahead. So let's say you're in the process of looking at mortgages. We're kind of wanting that show to be, well, here's what we thought was going to happen last week. And here's what to look out for this week. And if you're sitting around thinking, do I lock now? Do I not lock? We're hoping that that little short segment that he puts out on Monday night can help some of you that says, well, here's what we're looking at next week. And he's the lender, not me. So he's going to tell you, I think rates are probably going to go up. I think rates are probably going to go down. You can get a good feel for where we're at. And Sean says, what's a good estimate on what I should expect to pay percentage wise when selling a home? That's also all over the map, Sean. You can negotiate it. The average right now is 5%, 2.5% on the list side, 2.5 on the buyer side. And that gets financed into their loan. So they say the sellers are paying the commission. Well, not really. The buyers are, because it's built into the price. And they're financing that commission over 30 years. There's some litigation out there on that could change the whole scenario. It's going to take about a year for that to shake out. Very complicated. I'm not doing a video on that. But Sean, you can find flat fee people too as well. And usually what the flat fee people like to do is they like to have a lot of open houses. So they'll say, yeah, I'll list your home for $2,300. And then they pay the 2.5% to the buyer's agent. But then they have a lot of open houses so they can meet buyers. So it's called having a house they can use as a store. And find more buyers that way. So there's always flexibility in listing commissions. Just make sure that your agent knows what they're doing. I hate these horror stories that, like one I heard in Gilbert. And Andrew, I'll get to your question here in a second. And Jackie says, in a total of 8% with closing costs. Yeah, I forgot that part. Sometimes I heard a horror story in Gilbert once where the company came in and said, we're going to price your house at this. We're going to have an open house on Saturday. We'll review all offers on Monday, and we should have it sold, no problem. Well, it didn't sell. They didn't hear from them again. They moved on. So you get this, and they were going to charge them full commission. But sometimes you'll get agents that, they get your house on the market, and you don't hear from them. So get a schedule with them. When can I hear from you? Well, I'll give you an update every Tuesday. I'm not going to call you every day. I may give you an update twice a week. When you're listing a house, you're sitting there kind of nervous. Do I have any traffic? So make sure they're giving you traffic reports. Don't pay attention to how many people look at it on Zillow. I've never been able to correlate Zillow visits with an actual offer price. The MLS, even that's kind of tough, but you'll look and see how many people saw it, how many people saved it, etc. And that's a good gauge. And your agent can send you that on a daily basis if you want it. Andrew's saying, Avondale seems to be an interesting area with medium priced homes. Always seems to be strong with CMI ranking with Chandler and Gilbert. Where do you see this area going? Depends on the water again. Avondale is growing. That's for sure. Everything out there is growing. A lot of people that are living out there, they're working up the 303. So they don't have to drive all the way into Phoenix. And that's a good thing. As a seller, can you direct your agent to let the buyers know you're not reviewing offers till a certain point? You're in the driver's seat, Sean. So if you're listing your home, whatever you want, you can direct your agent to say, I only want showings 1 hour a day when I'm away. So you can do whatever you want. Make sure that you and your agent are having a meeting of the minds, that you both know what your strategy is. So listing a home is agreeing on a strategy. And what I mean by that is it's not agreeing on a price, because agents, I'll list your home whatever price you want, Sean. We'll look at the data together and we'll go, okay, here's the range where the home is coming in. There's no magic bullet that says it's $525,999. And you've heard me joke about list prices, $299, $999, $9. You're $1 away from 300,000. Just make the damn thing 300,000, because people search in 50,000 increments. So pricing it at $499, $999, $999. Somebody looking at $500,000 doesn't see your house because it doesn't exist because of $1. So make sure you have a strategy with your agent on what your pricing strategy is. Maybe we start here, but if we don't see any action right away, we're going to move to here. And if that doesn't work, we're going to move down to here, so that you're not shocked when you get that phone call that says, Sean, we started here, but it looks like we're going to have to have a price reduction to get more attention. So when you have a strategy, that's not a shocking call to you. Sean, let's start at 525. If we don't get any action in X amount of days, shall we move it down $10,000, or how about $15,000? So that you just know automatically what you're going to do going forward. Because that's where most people get upset, is when the agent calls and goes, well, didn't work. Looks like we're going to have to go down in price. That means they never had that conversation before. That means they picked the first agent, came there and gave them the best price. They bring in 5 agents, and the one that says 545 versus the one that says 535 wins. He gets the listing. He lists it for 545. He gets no action. You don't hear from him. And then 2 weeks later, he calls back and says, well, we might want to go down 15,000. And you just go crazy. That happens all the time. And it's because they didn't have a strategy. And running to altitude, you have a good source to find townhouse, house, or single family rental. The MLS isn't as strong as finding rentals as you would think. I would say Zillow is your best source for finding a rental, with some cautions, because a lot of people put their rentals on Zillow. And then when I say caution, beware of scams. And Craigslist, I would avoid that. Like, that's the worst one. You can find a good rental on Craigslist, and guess what? It'll be in Sun Lakes, and it's only $800 a month, and it's a beautiful house. Well, it's a house that's for sale. Somebody copied the pictures and ran a Zillow ad, so you can send them your deposit to Illinois, where they live, and buy by deposit. So watch for the scams. Have somebody check the tax records to make sure that whoever says they own the house actually own the house. So Zillow is a good source for rentals. Apartments.com, rentals.com, I think, is another one. Homesforrent.com, and the MLS. But if it's on the MLS, it'll show up on Zillow, because Zillow pulls from the MLS. So that's probably your best source. Most people that are putting a rental up, they just don't get an agent and put it on the MLS. And that's why even the rental price data that I look at, looking at the Cromford report, kind of have to take it with a grain of salt. All those big apartment complexes, their data doesn't go into the MLS, and private sellers never shows up in the MLS. So I hope that helps you. It can be a challenge if you're trying to find a single family rental. I just say, as much as I just pounded Zillow on the value of your home, I think that's a nice go-to place for rental. And so is, I don't want to say Redfin is, because Redfin pulls from the MLS. So Zillow is the only one where people can go and put on their own listing. So I hope that helps you. And everybody have a great beginning of the week. I'm going over to my brother's and having just an epic clam fest. So it should be a lot of fun. I can't wait. I'm salivating over. I'm not going to eat anything all day. Everybody have a great day. Take on the rest of the week. Take care.